Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar remained volatile on Thursday after the surprise Q2 GDP that came in at 0.6% Q on Q, its fastest pace in 2 years, with household spending driving the gain and net exports making a modest contribution. The stronger print tempered RBA rate cut bets, offering the Aussie near-term relief, though sentiment remains cautious as we now await US data. All eyes are on this Friday's non-farm payrolls, which is expected to see somewhere around 75,000 jobs added. And with that, with the weaker play of last month after July's 73,000 jobs, let's see how the market comes into play. A soft print would reinforce bets that the Aussie may rally, but then a stronger outcome may see the dollar strengthen and sending the Australian dollar back to 65 cents, with the base holding around 64.80. All eyes will be on the top side with 65.5, and break there could see 66 to 67 cents. The euro also a little bit cautious, as we can see, as it makes a slight uptick, but now trading sideways in a weaker play, but support still holds firmly at 115.65.75. A bounce from there is expected if challenged, and look back towards that topside key level around 118. Dollar yen, well, it did take a look to the upside and, as usual, found good supply returning around 149. Looking at the market, though, it may test one more towards that level, but I feel supply is still the key threat, and seeing a move back to 146 and the base, and still the broader call at 145. Sterling was weaker but rebounds and then looks for direction. As we can see, it may head on towards 135, but given that heavy candle, the technicals have got a lot of work to do to turn this bearish case around in the short term. Turning to commodities, the market posted a fresh record high of 3,548 yesterday, and then pressure came back into play as profit taking was somewhat heavy, falling back towards 3,500. However, the bounce found bargain hunters once again, and they may actually see this rally on, that is towards the region of 3,560 and maybe onto 3,600. Technically, though, I still favour from a broader case, and looking at this broad trend that still holds there from the weeklies, that we could even see the market rally on to eventually 4,000 for the big call. Wrapping up with oil, the market's weaker and playing back to the bottom side of its range, somewhere around 62.5 and reassessed. I do expect a bounce there, but all eyes will be on this weekend when the OPEC meet, where further output hikes are on the table. Well, that's a wrap. Thank you for joining me. As always, look out for the interest report, and I hope you enjoy the great start of the day.